All right, hope everyone's doing well. I'm just wanted to make a this would be a short video because it's late, but I want to try to start reviewing the end of the day for primarily the SPY or the E-mini, whichever chart I use. It's the same market, so it shouldn't matter. Now, one thing I do want to, and I'll talk about Forex markets too. Really, just kind of an end of the day summary for overall the E-mini and the kind of U.S. markets. So first and foremost, again, doesn't matter which chart you're looking at, but daily chart, definitely a sign of strength, very strong. This is the 1, 2, 3, 4, maybe the 9th consecutive bearish day. So an extremely climactic. I mean, just look at this chart. Let's just look at this chart and tell me when the last time you see 9 consecutive days. Maybe over here. There's 1, 2, 3, 4, 5, 6, but there's a bull bar right here. Is it a bull bar? The open was 94, close was 95, so there's a bull bar. But, you know, if you take that bar away, that's pretty similar. So that was March of this past year. Here's maybe the opposite. You know, a lot of bull bars. And I meant bear bars if I said bull bars, but a lot of bull bars over here. Not that common. Is my point. And because of it, because it's not that common, we get this on the weekly chart. This is the biggest. Something about these bars I don't really like. Let me go ahead and fix that. I like it. Well, no. Either way, they're really I just like them more red. Anyways, so mainly, you know, this is arguably, if you look at the news, it's the, I want to say the 10th. Yeah, it's the worst week in the stock market for the past 10 years. But either way, I mean, just look at the chart. Strong sell-off, two-legged pullback, another leg down. We've been bullish for, I want to say, we've been bullish for many, many years, probably 10 if I had to guess. So this would be the first year we've had a bearish close, so no surprise. Facebook is at a 50% pullback from this low to this high. I think 50% is like we're right there, but it's close enough. Either way, it doesn't really matter. Apple, I mean, we all know this stuff, but it's just kind of interesting to talk about. So Apple, I mean, what I think is interesting, close the gap here. We're obviously trying to test this gap. Strong enough breakout. You know, this is kind of what gets interesting with monthly charts. So, you know, in theory, we have a few things. Big breakout, 60% chance you get a measure move down. Well, I think that's in general true. I kind of question it in the sense of I think we'll get a second leg. I just don't think we'll get all the way down here, and we might. I mean, I don't really know what an exact 50% pullback of Apple would be. I mean, if it's okay, if I just take, hypothetically, well, it's actually pretty simple. If I just take 227, so 228 divided by 2, I don't really feel like doing the math, but oops, 114-ish. So, you know, maybe that's 50%. Either way, I don't think we're going to measure move down. But it's definitely the one problem the stock market has for Apple, and let me just go to the SPY to explain it because it's really the same for a lot. Even if we close down here, if we make a new high, we'll probably find sellers. So I think we're going to start going sideways for some time. And I think this is strong enough for a second leg down. Maybe 3 pushes, 1, 2, 3, or 1, 2, 3. Let me just go to a 5-minute chart because I need to wrap this up. For the SPY this morning, so we started over here. We had a, I'll turn this session on just so you can kind of see it. You know, I don't really like stuff on my chart. That's why you see it blank a lot of times. I just don't really I don't like clutter. I used to not be that way, but the more I watch out, the more I just kind of agree that I like to just look at the bars because that's really all that matters. So, and you can really you can really keep everything the same. So, strong rally, 2 legs up, so 2 strong bars, pause, 2 more bars up. You know, arguably a parabolic wedge, but really not that great. First push, pause, second push, which was this doji, and then third push. Either way, you know, the odds favored a second leg and a retest of this high. Strong enough sell-off that we get a second leg down. So this happens a lot when in sideways or trading ranges where you get a first leg, a 2-legged pullback that's subdivided into a 2-legged rally, which makes it confusing. But either way, so we opened here. There's a, you know, as always, 20% chance it's the low of the day or 20% chance the high of the day. In this case, there's an 80% chance we'll fall below the low of bar 1. It's a bad stop entry. It's a tight trading range. The limit order market, you know, here, reasonable buy. Not great. We went below the low of bar 1, quickly found buyers. So strong breakout bar, follow through, but look to the left. We broke above this high, but not this high. And there's always a 50% chance on the open that you get an opening reversal. And on top of that, look at these highs. So it's actually a wedge top. So here, went to here, so 1 push, 2 pushes, and then, I mean, really, you can call it an expanding triangle. I don't think it's really that important. You know, you can say maybe that, but it doesn't really matter at that point to me. So 3 pushes, 1 first push, second, third. What's more important, we have a strong second leg up with lower highs. We broke above this high over here, turned down. Broke above this high over here, turned down. You know, arguably you can always make the argument small breakout of a small breakout. So if we break above this high, we'll get a measure move, but I don't think it really matters. 40% chance as always it's a double top, which here it was. And you know, so if I was long, I'd get out below this bar. If I did not get out below this bar, I would definitely get out, you know, by the third bar. And here's kind of arguably where the bulls gave up, but not that easy because it's a trading range. Bulls probably make money. You may get a pullback up to here. And here's another example of a double top. So we had a lot of double tops today. So from this high, so here was one, you know, maybe from here, you know, most likely realistically, we didn't get that, but if you make the argument that this was kind of just that this was the double top, we got there. And it really doesn't matter. I mean, it's kind of, you know, you pick. But either way, we had, this is a double top, this is double bottom, we broke below it, we reached it. You know, what I would more look at after you get this is, here's an obvious gap. So I'd be more interested in seeing that, which we did get achieved. And even though we went below it, we quickly reversed on the next bar. Okay, so I need to wrap this up, so let me try to talk a little quicker. Here was the double top. You know, we paused, reversed down, rallied, and this happens a lot with double tops. You get a very strong rally. I don't have the days on my laptop, but maybe I can find one. I mean, it's just classic trending price action. Kind of like here, so strong rally. You know, we rallied, paused, rallied within a trend, measure moved down. So I can just kind of do this a little faster. Okay, and then, so over here, measure move, sold off. And really, we never got a decent major trend reversal. Bulls tried here, they got a rally, probably minor, 2-legged pullback, but a lot of bear bars, sideways. Bulls tried to rally, but most major trend reversals go sideways and lead to trading ranges. Tight channel, first up is probably minor, and then we got another tight channel down. So now you need another reversal. I have to say I did not think we'd have another bearish day, but we got one. So, here, decent signal bar. But again, it's climactic. Bulls will probably make money for a scalp, but we may just get to here and we may go back above yesterday's low and turn back down, which is ultimately what we did. Bulls had a two-legged pullback, but couldn't do anything with it, and then we kept going down. So for always in, I wouldn't buy here. You could buy here. Aggressive bulls would, but it's really a limit order market. And if you're buying, probably better to have a stop down here. Breakout bar, clearly always in long, follow through. Yes, but top of trading range, we may get a double top. Always in traders, always in bulls get out. Below this bar, aggressive bears sell below or they wait for consecutive bear bars. Minor reversal, okay to get out, betting that we may test up here, but if bulls get out, they've got to get short again. And if you don't have to get out, stop up here. You can put it up here, but not great. Bull and bears get short again over here. They get out, aggressive bulls buy, 3 pushes down, 1, 2, 3, but not great, not a lot of buying pressure. If they where do bears get short again? Well, I would not get short below that bar, and I wouldn't get short here. Too much risk of a double top. So, arguably, maybe you get short below this bar, but not great. And do bulls get out above here? They can. If they do, and theoretically, bears have to get short again. Excuse me. And same thing over here. If bulls get out, if bears get out, maybe they don't get short here. Maybe they do here. Not great though. That's the problem with the always in trading. It gets confusing real quick. Always looks like it's going to reverse, and it doesn't go that far down. But either way, forex markets. It's primarily what I trade anyway. So, euro, tight channel, trend line break, bulls couldn't get a second leg, strong breakout. You always have to be aware of these bars. Strong breakout, no follow through within a tight bull channel. Strong rally, and bulls reversed. Bears reversed. Bears are making money at every new high, so figures. So you have a big up, big down, probably sideways. So bulls will buy this close. Some bulls get out here, other bulls wait, and they scale in lower, which above this bar. And then clearly you can see they use this to get out. That happened in Walmart on the monthly chart. So buy the closed bulls, but top of the channel. Bears will probably make money, so not a great buy above. But if bulls did buy, you can see this close was 106.6. This high was 106.21. So we didn't quite get to it, but that's what caused the sell-off. So I think we'll get on to here. If the bears are lucky, we'll get a measure move down. So euro dollar 60-minute chart, but I talked about that. Triangle 1, 2, 3. The bulls just could not. We topped out, got the sell off, went below a major higher low. Dollar yen, we've been selling off for some time. Very tight channel, still tight, broke above but couldn't do anything. Strong bear breakout, probably gonna get a second leg and a measure move down. Which we got it. I think we'll get up to here, but again, may go sideways for a lot of bars. So there's no urgency to buy right here. You can see the bulls that did buy, the bears that sold, two-legged pullback, retested these lows. Canadian dollar, strong breakout, deep pullback, two-legged pullback. So it's nested two legs here, pullback 2, or one pullback 2, and then one pullback 2, so 2 legs down for the second. So it's really subdivided into 2 legs, what I meant. Another two-legged pullback, sideways, triangle, then very strong rally, very tight channel. Dollar franc, So strong sell-off, strong rally, but again, big down, big up, probably buyers below, which we got. And even at here, there's no compelling reason to buy, because you may have to form a double bottom, which you did, and then rally. So here, bear breakout, follow through, second leg down, probably minor reversal. The question is, will this gap close, which it did not. And no surprise, I'm sure this gap did not close either. No, it did. I was wrong about that. But strong breakout, deep pullback. And this is an example. We formed a trading range, sold off even lower. All right, that's it. Thanks.